Welcome to another episode of House Calls, Curing Your Housing Needs with Emily Almeida, broker at Remax Rising in Bloomington, Illinois. Today I have Sandy Vick with me from Compass Mortgage. Sandy is a lender with a lot of experience in this community, right, through the years. Sandy, tell us a little about you, and then we'll get going.
Okay, well, I have been with Compass Mortgage for just over a year. I've had lots of experience with banks, after takeovers and buyouts and closures and so on. So I've been doing it for about 27 and a half years. So I've seen it all.
That's pretty good for a 35-year-old.
Exactly.
I'm
just
impressed.
a baby.
I am very impressed. So today I just wanted to kind of talk about sort of lending issues through the ages, or through the stages, I guess would be a better way to say it. If we talk about what to think about when you're a first-time home buyer getting ready to talk to a lender, and then maybe a move-up buyer, and then a downsizer. We could even touch on like parents helping their children, gifting money for down payments. Just some kind of things that a lot of us face as we're in the home buying market. And any knowledge you could impart would be great. So you want to start with first timers?
Sure. First time buyers have different options out there. If you need down payment help, there's some different programs for that. They're usually income based, meaning they have an income limit, depending on the county that you buy in.
But they're fairly generous, are
They're
they
generous,
not?
yes.
Yeah.
There's one through IDA, Illinois Housing Development Authority. That one is $132,360
For a family of four?
For a family, actually, it could be two or more people.
Wow.
So what's nice is that we only count the person on the loan. So if you have a husband and wife that make $200,000 and they can qualify on that 132-ish, then they can still get that grant and that down payment assistance.
Nice.
So
Now, is a grant something that has to be paid back in a certain amount of time, or is it
depends.
prorated?
Yeah.
Okay, depends on the
So
grant.
they have, at this point in time, they have programs that change through the year. So as funding depletes, they may or may not replenish it.
Sure.
So right now they have 3 basic programs, of which I really only offer 2 because it makes sense to do the 2. One is a 4% grant, meaning 4% of the purchase price, capped at $6,000.
Okay.
That one is forgiven over a 10-year period. So once you're in the house 10 years, you never pay it back.
Okay, and that's for first time only.
Actually, no, that's not a first time buyer.
Okay.
Yeah.
Excellent.
It's all based on income limit. So
Okay.
as long as they make
Okay.
less than that 132,360, they can qualify for that 6,000.
Okay.
Just think
Nice.
about it in terms of how long you're going to be in the house, though.
Right.
So if they're going to move in 5 years, they might have to pay back that $3,000. So
Right.
that's not terrible.
So it's prorated.
Right.
Yeah.
Yep.
Okay.
And then their other main one, it's a grant technically, but I don't really call it a grant because you do pay it back monthly.
Okay.
So it's a 10% of the purchase price grant, up to $10,000 max. So you pay back $83.33 a month. But I will say my experience, I kind of didn't want to do that program a whole lot, but I'm finding that a lot of first-time buyers don't have hardly any down payment.
Right.
So I've been
Right.
having to do it a lot more. So, and for those people, their ratios may be fine for their debt to income, but they really need that $10,000 help.
Sure.
So for example, I have somebody who emailed me yesterday and said, do I really only owe $2,300 at closing? And I said, yeah. I mean, I think he was surprised, but $10,000 covers a lot. It can go towards your down payment closing costs.
Okay.
So it's a good deal. Their rates kind of go up and down like the regular market does. I feel like
Is it tied to a certain indicator, a certain index, or?
it just looks at the treasury like our regular rates do,
Okay.
but I feel like they go down more slowly than what regular rates do, but they also go up more slowly. So it's not, fantastic rate. There are more costs involved, but it does work for a lot of people.
But it gets you into a house.
Correct. Yeah.
So then you're starting to get, some of the benefits of building equity, some of the tax benefits of home ownership.
Correct.
So there are some, maybe you could even talk about that a little bit, some of the just intangible benefits of home ownership. I think we have folks who just look strictly at the monthly payment versus what they're paying for rent, versus the amount of money maybe they've saved and could put down on a home, when in reality there are other ways to look at it. Does that make sense? That, again, the intangibles, the tax benefits, just the paying yourself as opposed to paying somebody else.
Right. Rather than paying somebody else's payment, pay your own payment.
No, exactly,
Yeah.
because it's like people don't want to have a mortgage, but if you're renting, you are paying a mortgage. It just isn't your own mortgage.
Right. And I see rent, $2,000 is very common for me to see rent, and I'm
Yes.
like,
Yes.
again, dating myself, but when I first paid rent, it was $415 a month.
Right.
When I hear people saying paying $2,000, that's more than my house payment with
Right.
taxes. So it's
Yeah.
amazing what landlords are able to get now. So you might as well build your own equity.
It's right, and if you can even find the rental, not that homes are also more difficult to find, and certainly at between that 150 250 price range where a lot of people fall, they're difficult to find, but
Right.
rentals are worse.
Yeah.
So having tried to help some folks with rentals recently as well.
Right.
So, okay, anything else that is benefit? I mean, maybe I think people who are considering buying a home, I know that lenders often counsel them, this is not the time to go get a new car. Don't
Right.
open new credit cards. Don't close credit
There
cards.
you go. Yep. We do a lot of credit counseling. There are, some people that don't have the best credit, but we can get them there. And it's usually paying down revolving debt. But the biggest thing is do not, like you said, pay off, or I should say, do not close out credit cards, because it's better to have several credit cards with minimal balances than have a smaller available balance, because it shows discipline that you haven't used all that's available. Now you can get yourself into trouble if you have those
If you don't have
greater
discipline,
credit limits and you don't have the discipline,
Yeah.
but it does pay off credit card, or I should say credit score wise, if you do keep those open. So,
Okay.
so yeah, but thinking of some of the intangibles, part of it's, pride of home ownership. The other is if you have pets or you don't want to listen to people
Right.
stomping on the, floor
Right.
above you, things like that.
Right.
It's just,
That's very true. I was just recently with a client who was looking at a rental, and we were in an apartment, and upstairs they were just stomping up there, and it was the middle of the day, and it's like, oh gosh, yeah,
Yep,
I
yep.
remember those days.
kind of like being in a hotel room sometimes,
Exactly. I think another thing to touch on is and I know when I'm talking to clients, I'd like them to talk to lenders first. Obviously getting pre-approved is totally necessary in today's market. To be competitive,
Correct.
you have to have that pre-approval letter. But prior to that, your first stop needs to be with a lender. If you do have credit issues, you are very helpful in getting those worked out. Here are the things you need to do to get that improved. I mean, that will help your interest rate, right? I mean,
Right.
better credit,
Definitely helps.
usually better interest rate.
Correct.
So, yeah, it's anybody thinking about purchasing a home, talk to a lender.
Well, the thing is that people, their experience is getting a credit card, which is pretty easy typically, or getting a car loan, which is also pretty easy. You may pay for it in rate if you don't have the best credit, but people can get credit so easily that I don't think they even think about what their actual credit score is. But we're a lot more disciplined in the mortgage industry as to what credit score needs to be to qualify
Right.
for certain programs or certain rates and so on. So, again, we try our best to counsel them, but if we can't do it, we do have a credit counselor who that's his job, and specifically, and he can do pay for delete. So if you have a collection out there that's unpaid, you might pay part of it or all of it down to a zero balance or not, and he may be able to work out a deal with that creditor to actually delete it from the credit report, not just show it
Oh,
paid,
nice.
which will
Okay.
definitely improve the credit
Yeah.
score. So it's worth that. Of course, it costs money, but do you want a house and you want a decent rate, or
Right.
you want to just leave it on your credit report?
Right.
So, yeah.
Exactly.
Yep.
So, yeah, that's great.
Right. But also, thinking about things such as down payment, like a lot of people don't have a lot of down payment. Some people are lucky and do, and they've been disciplined and saved for it. But people don't realize that they can borrow from their 401k. They can, get a gift from a family member if they choose. So there's different avenues that some people think that they aren't in a position to buy a house, but there are options besides down payment assistance.
Right.
So.
Okay. Yeah. I mean,
Yeah.
there are lots of options, And as a realtor, we're aware of them, but we're not experts in the
Right.
lending arm of buying a house.
Right.
So, yeah. So that's why it's great to have people like you, working with us. I was just going to touch on one other thing, and I don't know a lot about this either, but I believe it's true. Aren't there different ways, how do I want to say this? Different ways that a credit score is calculated. So if you go to one of these online, I have a credit card that will let me look at like a credit score. But it may be different if I'm applying for a mortgage. Is that correct?
Correct. Yep.
Okay.
So mortgage lenders use credit scoring systems 2, 4, and 5. And I don't know the exact order, but it's Equifax, Experian, and TransUnion. So we use FICO 2, 4, and 5.
Okay.
Of course, Credit Karma, that's a bad word in our industry. We
Yeah,
don't want to hear
that-
Credit Karma.
Yeah.
It's a totally different scoring system. Even FICO 8 is not our scoring system. So I do feel badly when I talk to a customer and they think they have a 750 credit score and I tell them they're 640 because it's
Oh,
a totally
wow.
different system.
Yeah,
so it can be huge.
That's quite a difference.
So yeah. So that can change you from a conventional loan to an FHA loan.
Sure.
Just like that. So,
Sure.
But yeah, you do want to be careful as to where they're pulling their credit score. But I do tell people, hey, I myself monitor mine on Discover, and I don't know though, is Discover, using which of those 3?
Yeah, you don't know.
Right. So I don't know if that's going to be my low, middle, or high score because we use
Right.
that middle score.
Yeah.
So
Okay.
so, yeah. But at least it's a gauge so you know
Yeah.
if it's going up or down.
Yeah,
So,
exactly.
yeah.
Yeah, you can
Yeah.
watch it. You can watch it. Perfect.
Mhm.
All right. So what about people who have been in their house for some time? Well, it doesn't matter. I get a little time. Doesn't matter how long. But they're ready to move up. Okay. They're ready to sell this house. They want to buy maybe a bigger house. What kind of things do they need to consider or think about?
Well, in today's market, as you know, it's hard just to get a house offer accepted regardless of whether you have a house to
true.
sell. So,
Very true.
but if you have a house to sell, it's going to be much more difficult if you can't afford both house payments.
Right.
So, depending on their equity, they may have the option to do a bridge loan, which a bridge loan is basically a home equity loan that you take and use the proceeds from the equity in your current home before you sell it to purchase the new home.
And that's huge
Mhm.
nowadays because, like you said, back in the day, we used to be able to write like contingent offers.
Mhm.
So it was like a seller would accept my offer contingent upon me selling my current home within a certain amount of time.
Right.
Those days are gone. It's like because there's sellers have so many offers usually to consider that they're going to go with the strongest buyer, and that may not be the most money.
Right.
So it may be the buyer who doesn't have to sell a house.
Right. Or even if you have a buyer who has a house to sell and they're under contract already, that seller may not want to accept that offer either because they have no control over their buyer's financing if that's going to fall through.
Correct.
So there's another reason.
Yeah,
So,
it becomes like a little domino
Right.
effect. I
Yep.
talked to an agent the other day who it was a domino of 5 houses.
oh wow.
So like this first one had to close before the 5th one could close,
Uh-huh.
so that was
Right.
it all worked out, but yeah.
Yeah. So with bridge loans, it is a little bit more difficult to qualify for many people because you have to qualify with your current house payment, the new house payment, the bridge loan interest monthly, plus your
Mhm.
other debt. So we do have a specific program at Compass that we use a partner bank that is amazing. You do have to have quite a bit of equity, but what's special about it is that they also, in addition to the bridge loan, give you a cash offer letter, which allows me to not count the current house payment against the
Oh,
borrower.
nice.
So then they
Okay.
can qualify. So I always tell people, I really don't care if you close on the bridge loan, but use it as a tool to make an offer on a house that's not contingent and
Mhm.
still close the same day.
Right.
So your goal can be to close and buy the same day, but at least you were able to make that offer and get it accepted over others.
Right,
So
right.
it's a great deal. I'm looking forward to doing more of them
Yeah.
because I think it's an amazing thing that is the solution for so many people that can't seem to get their offers accepted. I think they're a little hesitant because it's a 0% interest loan, but they do charge fees at closing, but they don't charge anything up front. So if you never close on it, if you end up just qualifying with it, but don't end up using it, you're not out any money.
You're not out any
So why
money.
not do it?
Yeah. no, that's
So,
really nice.
yeah.
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 That's a very good program for sure.
Mm-hmm.
And I guess another thing I was going to say was you kind of touched on this, like selling or closing on both houses the same day. That becomes really important too, because if you're counting on the equity on your current home to bring, down payment and all of that for your new home, then you have to close on your current home first. So there may be a couple of hours when you're literally homeless.
Right. Go to lunch.
Go to lunch, yeah, exactly. Lock up the U-Haul, make sure your possessions are good. So that becomes sometimes an issue as well.
Right, or especially if you're moving from out of state. You've got travel time, and you just hope that it all falls together seamlessly.
Right.
So.
And then the other thing just to hit on, I think, is that a large amount of funds, or I should say funds in a large number, need to be wired. You can't just bring a personal check to closing.
You used to not too long ago.
I know, exactly. Times have changed.
Right.
So you have to allow time for that as well,
Right.
which is usually a minimum of a couple of hours they recommend.
Minimum. Sometimes I was at a closing one time and it took about 3 hours to get it because she didn't wire it the day before closing like I requested. So it happened the day of, so we sat there for a while. But I mean, we try to catch that up front to make sure the borrower knows, because I will say I've noticed that the wire time takes longer if it's an investment, like if they're sending it from their broker, like throwing out a Schwab or something like that. It seems to take longer for some of those companies than it does a regular bank. So that's why I tell them at least the day before, if not 2 days before closing, to be safe.
And just as a word of warning, like, make sure you know to whom you're wiring funds. Because there is fraud out there. And so you do have to be careful.
And we do get like phishing emails where people, they have that email and there's just one letter extra in there, and you've been communicating with this borrower for a long time and you don't notice there's one extra letter that somebody's trying to get their information. So
they're very, very clever.
Yes,
very
too much time on their hands.
Exactly. Just go get a real job.
Right, exactly. Get an honest job, would you?
So what about people who are like ready to downsize? Any advice for them? I know a lot of people that I've worked with, downsizers typically have nothing but time and usually money to get exactly what they want. So we take a lot of time to be able to get them the exact house they want.
Right, because they don't have to move, they just want to move.
They don't have to move, exactly.
Right.
And frequently they don't have to sell their current home in order to get their downsized home.
Right, so it may be paid off or almost paid off.
Correct.
So the bridge loan would work well for them too. And they may not need the end loan financing, so it may just be a bridge loan, and then once they sell their current home, then they pay off that bridge loan, and then the rest of the cash goes in their account. So if they're downsizing.
And sometimes they have the cash.
Right.
So I know we've talked about this, that you have to be able to produce some kind of evidence that you actually have the funds available if you are a cash buyer. Instead of that pre-approval letter, you get a letter stating that. And you're able to help out with that too at times.
So if a borrower approaches me, and I've had that happen, as recently just a few months ago, if they want me to review a bank statement to say, hey, I have confirmed this person has sufficient funds to purchase this house at list price or whatever they want. Sometimes I'll put it, they've got, so much money in reserves left over so they can more than buy it. Sometimes they can buy it 2 times over. So that way they know it's a strong person, that the funds are there. And that's not an issue whatsoever. So
Okay. I mean, any other things that we really haven't touched on that you think that we need to make people aware?
I think the one thing that I really like, is one of my favorite programs, is the mortgage credit certificate that we have through the town of Normal. So that's typically limited to first-time buyers, but veterans are exempt from that.
Okay.
So that one, they did actually just change the income limits recently. I think it was last week. 109,400 for a 1 to 2 person family, and then 125,810 for 3 or more people.
Okay.
So again, it's a pretty generous amount, But what it is it's a 35% dollar for dollar tax credit. So that basically at
Wow.
today's market, that means they're getting back an extra $2,000 a year every year, potentially for the whole life of the loan,
Sure.
provided it's their primary residence and they don't pay off the loan early. But it's a great benefit. I always tell the borrowers, you're going to love me at tax time when you get that extra $2,000. Or if they happen to typically owe on their income taxes, so let's just say they normally owe $1,000, then that $2,000 offsets it and they get $1,000 back.
Yeah.
So it's a great deal.
Yeah.
I actually have a veteran in process right now that we're working on. That was one of his big things is, can I qualify for this again?
Yeah.
Which he should, except for his wife has a second job now.
Oh,
so
gosh.
just like, so we're on the borderline. We're trying to figure that out, but it is
So
a
in
benefit
that
people don't want to give up.
That when they have to count both, they have to count both.
Only because we count both borrowers because they needed to qualify
Oh, I
with
gotcha.
both incomes
Okay.
for the new house. But yes, if
one
he could have qualified
qualify?
on his own, then I would have taken her off. But
Okay.
in this situation, they
Yeah,
needed both
gotcha.
incomes to begin
Gotcha.
with. So
Okay.
yeah,
Understandable.
Yep.
Awesome information.
thank you.
Thank you so much.
I appreciate you asking me to join you. This was fun.
Yeah, and it's like, and there's just so much to know out there, you know, and like I said, I know some of it, but I'm definitely not an expert, and I would never begin to counsel my clients on anything.
Right.
They need, you know, you need to be with a lender. So,
Right. And every
yeah.
lender's a little bit different. Some of us had different programs, but same thing with me. I wouldn't want to counsel them on a contract.
Yeah.
And what do you do with appraisal gaps? And what do you
Yeah.
do with escalation? You know, some
Right.
of that, it's not foreign to me. I hear it all the time, but
Yeah.
that's not my area of expertise. Talk to your agent, you know.
Right,
So,
exactly.
Yep.
Well, thank you so much
Sure,
for
thank
being with
you.
me today,
Thanks for
and
having me.
please write your questions in the comments. I'll get back to you, and I look forward to seeing you again.